And I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Shawi. Today is Sunday, the 21st of January 2024. I'll be doing the weekly market review. Starting with the DXY, we had the weekly time frame chart. As you can see, last week we traded to the bearish order block mean threshold of this up-close candle. Just above the up-close candle, we have relative equal highs, which is the buy-side liquidity. I'm looking at the constant encroachment of this premium wick, and I'm monitoring it next week on the daily time frame. If we get any daily closure above this level, we're likely to continue running up higher, taking this buy-side liquidity and running up higher towards these relative equal highs or the buy-side liquidity. Otherwise, I'm looking for lower prices. We have the sell-side liquidity here, a sell-side liquidity here, and the fair value gap. Going to the daily time frame, as you can see, we traded higher, bearish order block. To the bearish order block, we filled the fair value gap on the daily time frame. You can see between this candle's low and this candle's high, there's a fair value gap. Price traded, filled it. You can see the bodies are respecting the fair value gap. Only the wicks are trading to the bearish order block mean threshold of the weekly time frame, and on the daily time frame, it's trading to the bearish order block bodies, as you can see right there. So I'm expecting price to continue trading lower. I believe that, it can trade up higher, take out the relative equal highs, and continue trading up higher, taking the buy-side liquidity here. But I'm still looking for lower prices. I think that we still have unfinished business down there, which is the sell-side liquidity right there. So that's going to be pretty much it for DXY. Going to ES, here I'm viewing the continuous contract and viewing the weekly time frame chart. As you can see, we rolled up, we took previous year high, which is this buy-side liquidity, which comes at the 48.61 and a quarter. We took that high. We took also this high. Now the next high would be this buy-side liquidity right there. As you can see, price has worked inside the weekly fair value gap. We've formed bullish order block. I mentioned last week that we're likely to see this down close candle be used or be utilized as a bullish order block, and we've seen that this week recently when price traded all the way down lower, just fell short of this weekly fair value gap and then ran it up higher, took the previous year high, which is this buy-side liquidity and this buy-side liquidity. Next target would be this buy-side liquidity, so I'm primarily bullish on ES. Going to the daily time frame, as you can see, I mentioned that we're likely to see the bullish breaker to be forming. When I mentioned that this bearish breaker is going to be a sucker play to let's say build interest in the marketplace for people to go short, and we've seen that here. But later on, price early up higher took all of the buy stops that were residing there from people who were trying to short this bearish breaker, following patterns for pattern's sake, when in fact the context and the narrative of the high time frame is bullish. And I've been sharing that on my YouTube channel. You can go back in time, you can go to the previous weekly review, and you can see how I've explained that in the last weekly review. And I've mentioned that before price has even got up there above this high, I mentioned that we're likely to see this as a bullish breaker, and I've mentioned that also for NQ. So we've seen that now after price has printed it. So I'm showing you what I'm expecting to see from price based on algorithmic standpoint, and we in fact seen price attacking the buy-side liquidity, forming the bullish breaker. So any retracement to the bullish breaker would be bullish, as a bullish signal to me to take longs. What are the PD arrays that are supporting this idea? We have the old high here. Old highs are to be treated as discount. This is where old highs or old resistance is going to be treated as support. So when resistance turns support, this is where it would be working. Otherwise, it wouldn't work otherwise. So some people may think that this is a resistance. Once we trade below it, they will be selling here because this is support turned into resistance, which is not the case because the high time frame narrative or the context is still primarily bullish, and we're not looking for higher prices. But when it's in align with the high time frame narrative and it's aligned with the algorithm, you can use the old highs which were used as resistance, you can use them as support when price trade back to them, vice versa for bearish markets. So sure, the retail patterns can be used in instance when it is aligned with the algorithmic standpoint. So anyway, price has took this inside liquidity as I mentioned. Many people have seen this as a bearish breaker. I've told you beforehand that this is not a bearish breaker and they're just building interest so they can accumulate more liquidity so they can run up higher, because price has used a lot of its fuel to run up higher. So now when it's reaching to like a new levels, now you can see on the weekly time frame, this is the all-time high. So in order to reach to that level, it needs to engineer interest in the marketplace on the form of shorts. So it needs to build interest in shorts, and how it's going to be doing that by printing shorting signals that appears in the retail books. So many of them who are following the retail patterns are going to be seeing this as a shorting opportunity. They're going to be selling, and who's going to buy their shorts? Smart money are going to buy their shorts down there, and they're going to offset some of them above this high, above that high, which is this high, and eventually at the all-time high. When we reach to the all-time high, news are going to be coming out, driving sentiment for retail to buy out those shorts, those longs. So when smart money they want to sell their position, so if they accumulated longs, they need to offset those longs, and who's gonna buy those longs? So they want to sell their longs. Who's gonna buy them off the retail? Once we reach the all-time high, smart money or the media in general, they're gonna be driving the sentiment in retail world that we're reaching to the all-time high and it is the best time to be investing. Once you see that news, it's the best time to go short, because that's when smart money are either neutral, they have offset all of their positions to the retail world or the retail realm. For the people who are not aware of the market, let's say market structure and how the market operates, so they're gonna buy the top when smart money are gonna be selling those positions at the all-time high. So this is what I'm expecting for the future. I'm still expecting higher prices, looking for the all-time high here to be reached. So now, since we formed a bullish breaker, I'm expecting price can retrace. Any retracement here, we have a bullish order block, we have the bullish breaker, we have the old high, we have the weekly bullish order block. So many levels here are, let's say, aligned in each other with each other that are going to support higher prices. So that's going to be pretty much it for ES. Going to NQ, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. You can see that we attacked the previous year high right there. We reached to the rejection block. Next is going to be this buy-side liquidity, which is the relative equal highs. You can see the bullish order block that I mentioned last week. Price traded all the way down lower, filled this fair value gap, made it efficient by balancing it out. So here there was an up close candle, which is a busy, the buy side imbalance, sell side inefficiency. So it was inefficient in the sell side delivery. The next few weeks later, price traded all the way down lower to fill this fair value gap, which is a busy, with a CB, which is sell side imbalance, buy side inefficiency. It filled the fair value gap and then traded away higher, attacking the buy side liquidity. This is where price has worked from external range liquidity, internal range liquidity. So when price took out this high and reached to the internal range liquidity right there, so Internal range liquidity from the past is to be considered as external range liquidity. Once it reached the external range liquidity, it traded and worked inside the internal range liquidity. After price has walked inside the internal range liquidity, what do you expect? We expect price to walk inside or walk toward the external range liquidity, and we in fact seen that right there last week when price has attacked the previous year high, reached to the rejection block, and next I'm aiming for these relative equal highs, the buy side liquidity, which is the all-time high. Going to the daily time frame, as you can see, the same phenomena here that I've mentioned on the ES, I'm also mentioning it here on the NQ. The bearish breaker is not to be used at all. You can see when price has been trading inside the bearish breaker, there's a lot of buying and selling that took place. The retail were selling, trying to sell here, having their stop loss above this high and above this high, and smart money are buying those shorts here, and actually they bought down there, they bought this turtle stop, so the sell stop that took, so the sell side liquidity that was residing below this low, they bought that sell stop, and they're holding, offsetting some positions above this high at the rejection block and the all-time high. As you can see now, we have formed a bullish breaker that I've already mentioned and explained last weekly review. So we have a bullish breaker. Any retracement to the bullish breaker is to be considered as a buy signal, and I'm expecting some kind of a measuring gap to be forming here. I'm expecting this gap, which is on the daily time frame, to be left unfilled. I mean, it can wick to it, but I wanna see this gap be unfilled. So I don't want to see anybody's inside this gap between this candle's high, which is the long close candle, and this candle's low, which is Friday's low. I want to see that fair value gap left unfilled, or it can wick through it, but I don't want to see anybody's inside of it. So that's gonna be pretty much it for NQ. I'm still looking for higher prices. Going to Dow, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, we have formed relative equal highs. Last week price took the sell side liquidity and reached to the fair value gap, as I was calling out last week. I want to see price take out the sell stops, reach to the fair value gap, and then run up higher to the all-time high. As you can see on the daily time frame, price has traded lower, took out the sell stops, traded to the fair value gap, the weekly and the daily fair value gap, accumulated positions, and then run up higher, took out this buy side liquidity. You can see that this up close candle, which would be considered as a bullish breaker, you can use this candle or these consecutive up close candles, but I'm going to qualify this because this is the last up close candle before the run lower the run lower that took these relative equal lows and walked inside the fair value gap. Any retracement down lower to the bullish breaker would be considered as a buying signal to me, aiming for the all-time high. So that's gonna be pretty much it for Dow. I'm still looking for high prices. Going to Euro USD, also known as the fiber. Here I'm viewing the weekly time frame chart. You can see that last week we dipped one more time, took out the sell side liquidity and traded inside the bullish order block. I'm also monitoring the consequence of this discount wick. If we see any daily closure below this level, it's likely that we're going to be seeing lower prices attacking these lows here. So otherwise, I'm still looking for higher prices attacking this buy side liquidity and this buy side liquidity. Going to the daily time frame, as you can see, this is the buy side liquidity that I mentioned. This buy side liquidity, we have relative equal highs, and just above these relative equal highs we have the fair value gap right there, which I'm looking at as no liquidity. As you can see, price has traded down lower last week, took out the sell side liquidity, walked inside the fair value gap that I've mentioned last week. We have a fair value gap, as I've mentioned. We can see price wick to the fair value gap, and we can see in fact price wicking inside the fair value gap. As you can see, there is nobody's inside the fair value gap, it's just the wicks, and one wick has reached to the weekly fair value gap, as you can see, and then we have retraced higher. Now I want to see price treat this fair value gap that has been formed between this candle's low and this candle's high. This to be considered and to be treated as as an inversion favor gap. Once we trade above and close above it, I want to see price treated as an inversion favor gap. That would be treating it as support that can send price here to these relative equal highs and to the buy side liquidity here. So that's gonna be pretty much it for EU. I'm still looking for higher prices. Otherwise, if we get a daily closure, as I've mentioned, below the constant of this level, I'm gonna be questioning and monitoring closely if price wants to continue trading lower to the sell side liquidity or it wants to reach for the higher prices. So that's gonna be pretty much it for Euro USD, or also known as the fiber. Going to Pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. You can see that last week we've run the sell side liquidity here, and we quickly retrace and closed right there. So we formed a long discount wick. I'm looking and monitoring the constant of that discount wick, and I want to see price just respect it as a support that can send price here to the buy side liquidity. As you can see, in the last 5 weeks or so, price has just been in a range. It's not willing to move a lot compared to the last 3 months. So from, let's say, November, or the last 2 months, it is not moving as before, which is normal because now we are in January. We're expecting some movements mid-February, or to be exact, the second Tuesday of February. Otherwise, I'm still looking for high prices. I want to see price run up this buy side liquidity, take it out, and I want to see the weekly constant to be treated of this discount wick to be treated as support that can send price higher. Going to the daily time frame, as you can see, price is also walking inside this favor gap. As you can see right there, I haven't extended in the future, but you can see that the bodies are respecting the favor gap. This is the weekly constant from the weekly time frame. As you can see here, this is the consolidation from this high to this low. Price has walked here and then dropped lower, took out the relative equal lows, as you can see right there last week. So since price took the sell side liquidity, what am I expecting? I'm expecting price to run out the buy side liquidity. We have relative equal highs, we have this high and this high. I'm expecting price to, since price has formed consolidation, and then after price has formed the consolidation, it has run lower and took the sell side liquidity first. If price would have taken the buy side liquidity first and then started trading lower, this would signal to me that we have a, let's say, quarterly shift where there's going to be a transition in the marketplace, and we're going to be seeing lower prices for the next 3 to 4 months. But in this case, where price has formed a consolidation and then traded lower first, which means it has accumulated and engineered interest in lower prices. We are going to be looking at this as lower prices. I honestly think that price can wick one more time below this low to build more interest for retail to actually believe that we're actually going lower, and then run up higher towards this buy side liquidity. But I'm primarily looking for high prices attacking this buy side liquidity, and just above this buy side liquidity we have this favor gap, which is a refined favor gap between this candle's low and this candle's high, and we have this buy side liquidity, which is the external range liquidity that I'm aiming for right there. So that's gonna be pretty much it for Pound USD. I'm still looking for high prices after we've took out this relative equal lows, sell side liquidity. I'm expecting price to run out this buy side liquidity right there. So that's gonna be pretty much it for this weekly review. I hope you found this one insightful. Until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.